Hello everyone. Today we will discuss how market intelligence can become your ultimate competitive advantage in real estate. Most people in real estate believe success comes from reacting faster, jumping on deals, chasing trends, and following what the market is already doing. But the truth is, the real winners don't react to the market. They anticipate it. They see where demand is going before it shows up in price. They position themselves ahead of the curve, not behind it. And today, with the power of AI, that kind of foresight is no longer reserved for institutional investors. It's accessible to anyone who knows how to use it. Today, we will discuss the key topics that give you this competitive edge. Why market intelligence matters. The 4 pillars of market intelligence. Predicting hot zip codes before prices move. Migration trend analysis with AI. Pricing trend forecasting. Neighborhood momentum scoring. Building an AI-powered market watch system. Combining multiple AI tools for better insights, and how agents can stay ahead of their clients. Why market intelligence is the ultimate competitive advantage. Market intelligence is what separates average decisions from exceptional ones. Most buyers and agents react to what has already happened. But those who win consistently are the ones who anticipate what's coming next. AI allows you to analyze multiple data streams at once, migration, employment, pricing, and turn them into actionable insight. Identifying a high-growth area, even 6 months early, can significantly change your financial outcome. And using multiple AI tools together gives you a more complete and reliable view of the market. The 4 pillars of market intelligence. Strong market intelligence is built on 4 key pillars. Price trends show you where the market has been and where it may be heading. Supply and demand reveal the current balance between buyers and sellers for inventory levels and absorption rates. Migration patterns tell you who is moving and why, offering early clues about demand shifts. Economic drivers, such as job growth and infrastructure investment, act as leading indicators of future appreciation. When combined, these pillars create a clear and structured understanding of any market. Predicting hot zip codes before prices move. Hot markets don't appear overnight. They leave signals. Areas with rising employment and declining inventory often experience increasing demand. Migration from higher-cost cities brings in buyers with stronger purchasing power, pushing prices upward. Infrastructure developments like transit, schools, and new construction signal long-term growth. By analyzing these indicators early, AI helps identify neighborhoods that are likely to appreciate before that growth becomes obvious in pricing data. Migration trend analysis with AI. Migration is one of the most powerful predictors of real estate demand. As remote work reshapes where people choose to live, new patterns are emerging across cities and regions. When people move from expensive markets to more affordable ones, they bring higher incomes and expectations, which increases local demand. AI can analyze migration flows and identify which areas are gaining population and which are losing it, often predicting demand changes 12 to 18 months before they appear in price trends. Pricing trend forecasting with AI. Forecasting prices is not about certainty, but about understanding possible outcomes. AI helps model different scenarios based on factors like historical appreciation, interest rates, inventory levels, and employment trends. By analyzing how changes in mortgage rates affect affordability and demand, you can prepare for multiple market conditions. This approach allows buyers, sellers, and investors to make informed decisions based on probability rather than guesswork. Neighborhood momentum scoring. Neighborhood momentum scoring provides a systematic way to evaluate and compare different areas. By assigning scores based on price trends, inventory changes, employment growth, development activity, and school performance, you can identify which neighborhoods are accelerating and which are slowing down. A rising score indicates increasing momentum and opportunity, while a declining score signals caution. This method helps prioritize where to buy, invest, or avoid. Building an AI-powered market watch system. Consistent tracking is what turns data into real insight. By monitoring key metrics like price, inventory, days on market, mortgage rates, and employment data on a monthly basis, you begin to see patterns others miss. AI can interpret these changes quickly and highlight what matters most. Over time, this creates a structured system that keeps you informed and ahead of market shifts, rather than reacting to them after the fact. Combining multiple LLMs for cross-validated insights. Using multiple AI tools together increases confidence in your decisions. By asking the same question across different platforms and comparing their answers, you can identify areas of agreement and uncertainty. When insights align, your confidence grows. When they differ, it signals the need for deeper analysis. This cross-validation approach reduces blind spots and leads to more balanced, well-informed decisions. Market intelligence for agents, staying ahead of clients. For agents, market intelligence is not just about knowledge, it is about positioning. Agents who consistently share insights become trusted advisors rather than just transaction facilitators. Providing regular updates based on real data builds credibility and keeps you top of mind. With AI, creating professional and insightful market updates becomes fast and efficient, allowing you to maintain consistency and strengthen your reputation over time. Conclusion: market intelligence is no longer optional. It is essential for anyone who wants to stay ahead in real estate. Those who consistently track data, analyze trends, and act before the market moves are the ones who create the most value. With the help of AI, you now have the tools to anticipate change, reduce uncertainty, and make smarter decisions. The key is consistency. The more regularly you apply these insights, the stronger your advantage becomes over time. Thank you for watching.